Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 2nd of April, 2019, just getting on to 4:15 p.m. Central Daylight Time. Well, I thought today was going to be a down day yesterday. I said a strong up day on Monday could lead to a break today. If you watch or if you've ever read the Trader's Almanac by Yale Hirsch, pretty interesting reading. I learned a lot of this over the years, and you look for those things. That does not mean every Tuesday's a reversal from whatever Monday does, but you get these strong days, it could be. And the market that proved that that wasn't necessarily all correct was the NASDAQ. It was a strong performer, but the other indices had their pullback. Now, the interesting part is there's, number one, no volume on the break today. So I was watching that, and the market did not want to have legs to it. You did close with gains in the bonds and the notes. The dollar index was up, and it got within 7 ticks of the contract high in the June contracts, getting back over that 9,700 level. So what's the market hoping for? Well, Brexit didn't go anywhere today. Now, Miss May, the UK Prime Minister, is reaching out to her rival, Jeremy Corbyn, to see if they can put together a coalition for one purpose to get Brexit done. Who knows if that will work? And of course, we hear about the U.S.-Chinese trade talks, and if I'm correct, the Chinese delegation's about to come in. There's been very few leaks. We heard the Chamber of Commerce representative talking about that today, his opinion of it. But more people than not think a deal of some sorts can get done. But what the Chinese want, lift the tariffs, then we'll deal with the enforcement issues. You know, if the president does it right, he's got nothing to lose. He can lift the tariff and put it right back on if he doesn't like how the enforcement issue is working out. So I don't know that there's anything to lose there. Maybe a little face saving for the Chinese, get the deal done. Remember, again, you don't like what you got, back right out. The weekly area chart of closes. This market is the market that never ends. And I'm watching so many hosts and so many different analysts coming on TV, both the host and the analyst, talking about the fact that now you got to be careful. Are we going to go for the all-time highs? First of all, I don't know anyone that thought this break was going to run up like that. That's the first thing. Second of all, as you look at the market, consolidation, but at the upper end of these ranges, this is the daily bar chart of the June S&P, the trend is clearly up. Higher lows, higher highs. Now we're at the top part of this range trying to break out from here. You can afford a pullback if the market wanted to the 18-day average of closes at 28.22 and literally do no damage to the pattern of higher lows, higher highs. The resistance is, you're looking at it, the upper Bollinger Band. And as you can see, when you've hit the band in the past, you've generally run into the resistance area there. That doesn't mean you don't work higher, but it ran higher without getting up and over the band. This market's knocking on the door of that one more time, and you're overbought. Now, when we had the run over here, where you were going up, you had an embedded reading. So there's two ways to look at this. You're overbought, which means if you hit the upper Bollinger Band, you're not embedded. Maybe that's an area that the market has problems. Or maybe the market's on its way to getting embedded. The one thing I don't see is on this current pattern, unless you're going to come down immediately and take out 27.91, this market looks to me as though it's just still very much in the bull phase, very much overbought, and near resistance. In the NASDAQ, you've got a lower low, higher high, overbought. There's a common theme. We're getting overbought. You've got a ways to go to get to the upper Bollinger Band. And there's no magic there. You can get over it. You can hit it like you did here and run against it. But typically, if you do that just the way you did here, you'll embed. Embedding means you take both numbers that make up the slow stochastic study, shove them over 80, and keep them there for several days. You haven't done that. In the Dow, overbought into the upper Bollinger Band and stalled a little bit. Does the market have the power to push out that band and keep running on it? I don't have the answer. I can tell you the trend is up. I got the action I wanted today with a small reversal. That's not enough to cause a top of any point. I know you're in resistance, but that trend is still up. And in the Russell, the stall today, but again, you've got the higher lows, higher highs. You got bias up because you're over the 18-day average. Momentum up, flattening a little bit, but still pointing to the upside. Two levels of resistance coming together, 1579 to 1587 roughly. That's the 200-day moving average of closes in the upper Bollinger Band. The important thing is here, the markets tomorrow, even this market will probably join the overbought status if you have an up day tomorrow. So overbought, but the question is, overbought generally pulls you back from getting overly careless in the market. The VIX went nowhere. And by the way, volume today was watching paint dry. The trade got very, very slow through everything. If you go down to the lower Bollinger Band, I would look for people to be writing of what? Puts. Now, that number is 1209. I think they look at the 18-day averages and get me out zone. Let me come back to that. If you rallied up to the 1637 level, depending on how you did it, if there was a piece of news, because that'd be a big jump from where you're at. It's 3 points, so I'd have to see what the news is. I'd be surprised that between there and the 100-day average of closes, you didn't find resistance. In the bond market, if the market can get over this 147.31, I think you put into play that 18-day average of closes. It's in play anyways because you've lost the embedded reading 2 days in a row. And this is what an embedded reading looks like. Again, it's when the K and the D lines are staying over this number. It's a contra-trend trade when you lose it because you're looking for price to fall down to the neutral number, the 18-day average of closes. We'll see if it can do that or not. 10-year note, same identical thing. So I'm in the camp that thinks that the notes and bonds want to pull back to that 18-day average. That's not a bear camp. That's looking for the market to come back to those numbers. TLT, same thing. It's joined the parade. Excuse me. You lost the embedded reading yesterday. You kept it lost today. So as I see it, there's a high probability of the market making a run for that number. My thinking would be out the door if you took out the highs up here, the highs up here, the highs over there. I'd have to go back to the drawing board. But this is what I think right now. In the dollar index, you finally have cleaned up this messy chart action by giving me at least a low I can hang my hat on with another one. Prior to this, I had said, excuse me, I have terrible allergies at this time of year. Higher lows, higher highs, fighting. Now, the question is, do you get to that upper Bollinger Band? And if you do, what do you do against it? Often the first challenge of that number is met in a selling zone. So it is something that just because the market's getting up here, and I realize people get more bullish, I look at what the odds favor, and the odds favor smart money probably taking some money off the table if it gets up there. In the euro currency, it doesn't stop breaking. You're at 112.69, lower highs, lower lows, lower Bollinger Band right here. Now, what would make me change my mind, and you can just lean against those Bollinger Bands, would be if you embed the slow stochastic reading. You have both numbers on the close today under 20. You did not have it yesterday. You just have an oversold market. It takes several days to get to that number. In the British pound, again, the saga continues. Now Miss May's trying to get together with her nemesis, Jeremy Corbyn, and see if the two parties, the Labour Party and her party, can get together and do anything to make a proposal to the European Union. At the same time, I'm hearing the EU is preparing even stricter terms if the UK wants to stay in. Anyway you go, how is everybody going to handle the May 22nd deadline for EU elections? April 12th is the date they've given them right now. I think everything's a moving target. It's such a difficult deal to call. In the Japanese yen, this is like watching water drip out of a cup. As the market's trying to get down to the lower Bollinger Band, it's already oversold. Doesn't quite have to get there. The bears have had their way. Resistance above the market, nothing bullish on the chart. Bitcoin, this is your breakout. We had talked about this, that if the market was going to break out, and this was Friday, and I know that I've talked with you about it here, the first thing you do is you get overbought, and this was yesterday. And if you're going to push it out, You have to either get overbought or oversold when you're coming out of sideways action. I didn't see this coming today, but am I surprised? Not at all. It was pushing on the top side. So now the question is, with both numbers over 80 today, both over 80 yesterday, nope. You're just plain overbought, reaching out now, and people will look back and say the market at the $3,000 level probably bottomed out. In fact, until it's taken out again, I'm going to label the way that I trade that the market has put in a bottom there. In Brent versus WTI crude, wow. This was at 920. You realize the spread is bigger than the trade itself. It's come in $2.5, $3 already on the market. And if you look, you've just been going sideways in the Brent, overbought, trying to push out the upper Bollinger Band, not in a trend, lower low, higher high, and not embedded. WTI crude is at least in the uptrend. This is where the strength comes in. Higher lows, higher highs. How many days do we have here of the numbers over 80? Today, yesterday, day before, not the day before. You embedded today. So this means on the pullbacks until that red number closes under 80, I think the pros are looking for breaks, believe it or not, even after this rally, to still buy into. In gasoline, you went back to the upper Bollinger Band, and when you've recently been hitting that, it's been a zone the market's selling off from. But remember, you're at April 2nd. You've got that push for higher gasoline prices through spring and into summer. Just keep that in the back of your mind. And at the same time, natural gas is at that terrible time of year when you don't have enough cold weather, you don't have the hot weather, and the demand for it sort of slips away. So those are the things that I'd be looking at one way or the other with that. Of course, you get the EIA number tomorrow. I've got the API already for my report tonight. I don't give you everything here. I'll keep some of it for the people that pay me for my market research, and then I tell them what I think from there. Again, I want to remind you, we have our webinar on Thursday, and in that webinar, you bring your questions. I do my best to answer them. I read them out loud, and away we go. We see what we can come up with. It starts at 12:30 p.m. Central Daylight Time this Thursday. That's the 4th of April. How to get the invite to it? If you didn't get it in the mail already, and I'm talking your email, you're not getting it. Call us. We'll get it to you. It means you're not on my mailing list, or it's lost in your computer, or you've been called off the list. We do that. We see people coming over and over, and then they don't do any business with us. No, we get rid of them. So give a call. You might want to be back on that list. I'm Ira Epstein. Have a good evening.